All right. Welcome to weekly meeting, August 26th, last week, NFP week, all that good stuff. So what I was basically saying here is to pick on Selena. This was a trade idea that we discussed last week. And the trade idea was based off of the God's plan strategy, right? You have a strong bullish move. I think this candle traveled close to 500 pips the previous week. Yeah, the candle from wick to wick is about 480. So we expected a pullback, to the 50%. So if you threw a fib on this, like we all did, this was a trade that we kind of talked about, I think, as a group. And you throw the fib on this joint, even if you get the trade to come back to the 50 from where the candle starts out, you're looking at 150 pips. Everybody should be able to eat off of 150 pips. I mean, you should be able to get 10% by now. If you've been trading for a while, if you're new, don't worry about your percentage, just execute the trade. 150 pips is a great amount of pips. So if you just use the God's plan strategy, which is 100 pip stop loss, you can see if you had just started your trade at the beginning of the last week, there's a 100 pip stop loss, right? The trade easily qualifies for that move, right? Now, if you had stretched your TP all the way to the 78, which most of us are probably able to do because we can drop down here and look at the 4 hour and we can see, hey, we have an order block here that we might get a reaction from. And if not, it's probably going to reach this demand zone down here, right? Whether you trade supply and demand or you call it something different, that's cool. But you just keep dropping down and, pretty soon you're going to find an imbalance, right? And if you don't know how to trade zones, we all talk about impulse move that creates the imbalance and the trade pulling back to the imbalance before it goes back up to the high. This is what we discuss as a group. So we call the trade out, however you choose to get in, and I think in her case, she probably got in. Me and her talked about this trade, so I can tell you exactly what happened. When the market opened up, this was August 23rd. I think it pushed down first. It pushed down here, and she entered the trade, maybe I think on this candle. But she entered the trade like down in this area. She put a 50 pip stop loss instead of the 100 pip stop loss. So when the trade pushed back up, it stops her out. Then it just cascades for the 300 pip move. So when you cheat yourself, when you break your rules, when you get cute, this is the carnage, that you have, so you're trading a funded account, you take I don't know, a 50 pip loss. Maybe you had a good lot size, maybe you didn't. Maybe you lose 1%, 2% of your account. And then the trade cascades, and you look at this trade would have paid you 3%, right? That's what the 100 pip stop loss. It would have paid you 3%. Instead, you lost a percent, or 2% or whatever you were using this trade for. And for me, this type of a setup, I would have had a higher percentage myself. I don't know what she put on this, but to a person, when we have ideas or you have a trade plan or you have rules, you have to abide by them. And if the rules, I mean, if you lose a trade, which we all do, we're all going to lose trades. If you lose it, but you stuck with the plan, you executed the trade, then, hey, man, that's one thing. But if you lose a trade because you got cute and you got flipped with your rules, and then after you lose, the trade does exactly what we discussed, shame on you. Shame on you. You know, she also told me that she would have got out the trade, you know, up here somewhere. I think right here. This would have been her TP. Why? Why is this your TP? Because you don't want to see the trade hit it and pull back? No, man, this is not your TP. Your TP is at least the zone, but preferably to the imbalance. Because why you don't have anything to lose down here? You don't have anything to lose. This is a 4-hour candle. This candle doesn't even retrace half of this candle, so there's no reason for you to panic.
Okay.
You get another push down. This candle doesn't even pull back up to the first candle. You get another push down. This is you can't take profit here. There's like we're not executing trades properly, and it is sabotaging our mental. Like it's bigger than you taking a quick profit right here and feeling good about yourself. You're screwing your mental up. This is not how successful traders approach the market. If you're a person that can't hold a trade because you're so nervous every time you get a green candle, bruh, then you don't understand market structure. The swing high is up here, right? The overall swing high is up here. You've got it covered. You got all these highs covered in your 100 pip stop loss. If it goes against you, then the trade idea is bad. That's cool. But this trade didn't even ever approach that swing high, man. It did everything that anybody could have asked a trade to do, to include line order blocks up, and kept falling. Never even pushed back up to get a full retracement to the imbalance or nothing. Just push down, 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 right to your zone. 300 pips. 300 pips.
In fuego.
Bruh. This is costing us our trading lives, because these are moves that everybody talks about. We talked about this as a group. If we go back and play that recording last week, this trade was discussed. So who lost money? It's a rhetorical question. Y'all don't have to say it. Who lost money this week after we talked about a 300 pip move, bro? Like this is it's just like criminal. It's criminal. So if you're that person who has the bad psychology, you have to stop the self-sabotage. Now, if you're trying to trade intraday or some other method of trading, I got it. You know, I can't really speak to what you're doing because that's not the way I trade. You know, I trade on the swing, and I want to catch the 250, 300 pip move. That's what I love, because if I can get in a move that's going to pay me 300 pips, I'm going to make it do what it do. You know, I'm going to get my percentage out of that move. Now, I will trade other smaller moves like, you know, I did this week, and you know, I'll win some and I'll lose some. Most of the time I lose on the smaller moves because I'm not a smaller move trader. You know, I'm becoming, or you know, I'm trying to execute better smaller moves, but more of those fizz out on me than the larger time frames. So these moves that we look for, or that we point out at the beginning of the week, are the higher probability setups for me. Now, if anybody is looking, you can eyeball this as a fib from here to here, and this pullback is 78 like Osama gun, right? We get a 78% pullback. What happens at your 78? Price bounces up, breaks these highs, which is called a chalk on the 4-hour. It pulls right back down to where? The 78 to let you in the trade and buys back up. So you got your 300 pip sell. Then it bangs out. You could have got your buy entry here and you'd be up 37 pips in the right direction.
Already.
So if you if you know what you're looking for, then there is plenty of opportunity. All you have to do is trust what you see and trade what you see, right? If you look at this from a flip side, this is a reverse head or inverted head and shoulders, shoulder, head, and another shoulder, right? What's probably going to happen, the price is probably going to push back down and fill in this wick a little bit. Maybe it doesn't go all the way back down to the 78. Maybe it comes to the 61, which is a good entry for the buy back up. So that might be a good trade setup for you. You know, if you look at this trade on the weekly, it could just be a bullish order block here. Could be creating a new bullish order block, which would be cool. Maybe it goes up and sells off again, but you're going to get the up move at least back to that zone that was at the top, right? You have a zone up here that hasn't been tapped. You have imbalance. You have imbalance here. So even if you call this an impulse move down that breaks these swing lows, and you're of the opinion that this is going to sell, which, I mean, it could, because if you look at the monthly, maybe we've tapped this monthly order block and we're looking for a push down, which, you know, that's an option as well, but you're still going to get the buy up first. So if you understand the things that need to happen, you can look at this as an impulse move down. If you drop down to the hour, you're going to see the imbalance huge, right? You're going to see the imbalance here. You got a zone right here. So you can at least trade the price up into the zone. It's probably going to react. Maybe it goes up to this imbalance area, and maybe on Tuesday or Wednesday, we're looking for a trade back down. But you have to have the ability to not only see it, but execute what you're seeing, right? Obviously, the buy back up is what you're executing. So because I don't want to get people preoccupied with what's going on in the future, if you just got in for the buy after this pulls back and it goes up to this zone right here, again, 150 pips. A great week, 150 pips. If it goes up here, 250, right? If it fills this imbalance, 250. Y'all all understand the teachings of ICT, where it falls off a cliff, it comes back to the imbalance, right? And you get in for the sell, and you can sell it to equal bottoms at least. These moves happen all the time, and we just have to learn to execute those moves. There was a move, a slow developing EN trade that never finished, right? A couple of us took this trade, the buy up. Y'all remember the EN trade? Let me pull it up, because
Yes, the one you posted on Friday.
yeah, and it's, man, it's like watching pond water, man. A very frustrating trade, you know, and I'm still in that trade.
Yeah, the lingering trade, it's, you know, to finally see it play out and get to understand that sometimes it's lightning fast and then sometimes it lingers, but it still plays out. Like,
Exactly.
you have the confidence of knowing, hey, this is gonna play out. It's just a matter of time.
Yeah.
It's for the people in the back, because they don't have enough experience to trust that this is what's happening in a back and forth fashion. People are having a hard time. Like, I think over time, you're going to start seeing how you can go in both directions. It's not advised to focus on that if you're not profitable yet. But ultimately, when you get this down, you're going to confidently go in both directions, because now you're covering the time that you're spending on the chart. If you spend that much time on the chart, you should be able to catch a buy position just like you're able to catch a sell position. When you see everything in place that you need to see, you should be able to confidently execute that trade, no matter where you're at, right? So when we talk about the up move and the down move, the layman will be like, okay, well, he just said both things. Which way is it going? Well, you have to be prepared for both directions at all times. And eventually in this group, everybody's going to be able to do that because that's the way you're supposed to do it. Right? We're just lacing you up and getting you into that zone of thinking because you want to be able to fill all your time in. If the time is supposed to be spent on a sell, you should be catching the sell. If it's spent on the buy, you should be catching the buy and be able to be versatile with it.
Okay, I just want to recap that trade I did. So this is all that I saw. Obviously, you got the Wyckoff, right? Price pushes up, breaks this high, pulls right back, right? I didn't get in on here. Then price pushes up, wicks past this high. If you zoom in, that's going to be a wick. It pulls down and it does give you the 78. This is when I actually saw the trade. Friday, 5 in the morning, right? I waited to make sure that it was going to push up. It pushed up, it pulled back again. I got in the trade and I waited. It waited. It waited. It waited. And it eventually it pushed up and I had supreme confidence at this point. It pulled back and now we're pushing up. So bigger picture, I'm still biased for this to be a sell, but it's a 7% trade, man. It's 100 pips, it's 7%. Y'all saw I was on the 10-minute chart whenever I saw the trade. But if it goes like up to this level, it's going to be a higher percentage than that. And I really believe it's going to buy up, to this level right here, because on a higher time frame, or this is where the imbalance is, probably on the 4 hour. Yep. So this is a 4 hour. This is the close of 4 hour imbalance. So I would look for it to come into this zone. Really, the stop loss on this trade, it really doesn't matter because I'm in the buy. So this buy, I will be up 8% at this point. Then I can open a sell to go the opposite direction. All I want to do is cover this swing high, right? The swing high, there's a zone right here. Is cool. If it breaks this swing high, then this sell to me is not valid. I'll just hold the buy trade, right? Until it shows me that it's going to go higher or whatever. But the fact that we broke all these lows tells me that we should pull back up into this imbalance, right? This is the classic IC teachings on slide 3 of the mentorship 2022 on how you break the swing low. The action that caused an imbalance, you go, price pulls back into the imbalance, you have your stop loss above this high, and we should be able to trade price back into the discounted zone, or smart money says equal lows. So you could take the price here safely. This could be TP1. But all I did was fib the move. The actual move is from here to here. So the discounted level, right, would be, would be the 50% mark. And these relative equal lows down here would be where you want to target. There's also an imbalance down here. So if you want to hold it till it hits this imbalance, that's safe, right? I don't know everybody's individual thought on where this trade is going, but this trade has not tapped the zone. I mean, it tapped in that first time, but it hasn't come back and tap. So it could come back and tap at your 50% mark. It can push further, maybe touch these moving averages and go back up. But regardless of what you feel personally, you just allow the trade to play out. By the time the trade is way down here, you're deep in the profit anyway. Does everybody understand that? If you notice, this trade covers a lot of ground, right? Almost 500 pips. And when you look at the weekly chart, it's still in the uptrend. It still supports the fact that the price is moving up. It's just bringing the trade back to the moving average. Who doesn't see that? This is where you get your questions answered. No questions. All righty, good people. All righty, good people. I think, let me just make sure. I think Selena has this EN trade on her list. You know, the beautiful thing about these trades is if the trade does something funky, you don't even have to click the sell button. you can hold what you got. Yeah, so this EN trade, EN has a bearish weekly order block. So obviously we expected to buy up first, which goes right in line with the trade that I'm already in. You know, we expected to buy up first, then push down. So maybe this buy will take until Tuesday, you know. To me, the time is really immaterial. We just have to understand what we want to see as traders, right? We want to see this price come into this imbalance, right? We want to see price mitigate the imbalance, then show rejection and sell off. That's what we're waiting on for this particular trade setup. Does everybody understand that?
We say that
Yeah.
that's the why. That's the why. People don't believe that. And it's going to take time to where you get to the point where you can say, I actually believe that statement as to why. It's not that it has to happen. That's what we want to happen because we want a sell. It's already a buy. You can't catch many pips on the buy right now. The only reason you're using a buy right now is to catch a sell. The sell is what's going to give you pips because it has to do a healthy pullback. So you're going to get more pips on a sell in this situation than you're going to get on a buy. So you want to stay out of the way of blocking yourself into a buy position where your buy is only going to go, what, maybe break the top of the structure a little bit at this point because of how far it's traveled so far. It needs to come down. So you have to position yourself and psychologically tell yourself that if this thing does go up, that it's giving me a sell position, right? And you want it to happen first, right? So if we see this going up all the way into Tuesday, Wednesday, then excellent. That's exactly what we're looking for.
Guys, this is like super important because this right here is the premise for grade A trade setups, right? And most of the time, this is going to be where you get your deep retracements, right? Let me just move this thing down. For this particular move down and the pullback, this pullback right here is past your 61.8, right? If it closes the imbalance out on the 4-hour, it will be just shy of your 78, right? These are the entries that most of us are waiting for. Most of us look for the 78% pullback. So it's the very reason why I cover this swing high right here. If price touches the 78, which it very well could, right? It could go up here, grab liquidity. It could go up here and make equal highs for the next move after it pushes down, right? Remember, this is still a bullish market, but it needs to sell back down, you know, big picture wise, it needs to sell back down to the zone before it pushes back up. So it could very well go up here and create equal highs at the 78 before it sells back down, because it's setting up some liquidity. It's creating liquidity here for the next time it pushes up to grab it. So we want to get to the point to where we have an understanding of what we like to see and also the possibilities, right? I want to share this video in ICT's personal language, not mine, because I want you to hear it from the horse's mouth, because some of you have never heard this.
Market rallies up into that, you go short there. Still learn people one-on-one in teachings. That's it. Okay. You can't find it in books prior to that.
All right.
Candle right here. See that little light bulb? That's when you're thinking 681, that's one handle or 4 ticks. There are some that will doubt the idea that you can trade all these little internal swings. Okay, and I'm going to give you some insights on how I was doing it. Okay, the main context of this lesson is for you to go in to your charts and try to prove me wrong. Okay, that's the challenge here. That's your homework. I want you to learn what I'm doing in this lesson here. And then you go into your charts, back testing, and I'll show you what that looks like. What does it mean to be back testing and what you're looking for and how you're going to screen capture it, all those things. But your mission is to go into the charts and look for this not being true. Okay? This is exactly what I did on baby pips back in 2010. I told everybody, do not take my word for it. Don't take my word for it. Go into the charts and see if this is true or not. I believe it, but I don't want to try to convince you, because I won't. You'll convince yourself once you start seeing it. It's it. It's over. There's no argument after that. Okay? But it's simple logic. Very simple. This is a very clean chart, is it not? All I'm going to do is add a few annotations, and this is about as extensive of lipstick we put on our chart. I know it's shocking, right? Can you still see the candles? Because it might be a little obstructive. I'm being facetious. You see these guys out there with these charts that have graffiti all over it. You can't even see the price candle. Nothing. You can't even see any of it. But there's all kinds of overlays of all kinds of nonsense, which means absolutely nothing, because algorithms could care less about any of that stuff. Triangles, harmonic this, crabs. It's crazy. I know. But hey, everybody's got to have a religion. So here's those sell stops. So this little area here it's shaded in, that's a area where sell stops would be residing below that 14,600 level, okay, on that 15-minute time frame. So the market dove into that liquidity, and you may or may not know that is a buy. You don't need to. You anticipate a shift in market structure. When the market rallies above, when does that happen? On this candle right here. See that little light bulb? That's when you're thinking, okay, now I have a condition in the marketplace that I might see an opportunity intraday. Let's see if there's further evidence to that. Short-term high is taken here. We traded above it. It does not need to close above that. Okay, real important. Once that candle closes and this candle opens, you're going to monitor this candle. And you want to see, as soon as this candle closes, does it create that fair value gap? If it creates a fair value gap, again, that's a candle at the high, one single pass up. Next candle has a low that doesn't completely overlap all this. That's a fair value gap, real simple, okay? This candle is where you would look to potentially trade at the earliest, because now there's a gap there. The market trades down into that, boom, takes off. Here is insight that everybody needs to understand, because they're out here running around on YouTube trying to teach order block theory. Order blocks. Okay, I invented it. It's mine. No one talked about it before me. And I first mentioned it in 2010 on baby pips. Prior to that, 1996, I was only teaching it to people one-on-one in teachings. That's it. Okay, you can't find it in books prior to that. It's mine. No one else taught it before me. It is mine. So I'm going to correct all of you today, so that way you can teach your people correctly and not hurt them. See these down close candles? See that? That's all one continuous order block. What's it doing? It's inside that pool of liquidity, sell stops. Where's the open on that series of down close candles? Right here. That's the price level extended out in time. Boom. So inside this fair value gap, this opening price on the order block, that's your buy plus 3 pips or whatever for spread. And that's what you would use for a limit order. That's pretty neat, isn't it? Well, price starts to run where? Above the highs where buy stops will be here. Above this high here. And above this high here. Now go back and look at the example where this particular day here, I put in orders and I was still learning how to use the Thinkorswim platform. And there's a little toggle box where if you toggle it, it'll send your order right to the marketplace. It won't let you review it. And I had put that on to see if it was going to show me any kind of information on the screen, but it didn't take it off. So what happened was I put that on, and it was actually an order that I mistakenly had in. So I was hoping to see if it could give me an opportunity to get out of it and cover with next to nothing, or maybe even squeak out a profit. It wasn't having it. So I had to reverse and go back and go short, wrote it down, and then you'll see me covering in here and then going long, selling short, reversing, going short, buying long in here inside the order block, rallied up, sold the long, reversed it, bought it here, got out over here and resold for that big run into that. Okay. That's what I was doing. There's people out there who are going to tell you, he doesn't trade that way. These people don't know how I'm trading. You have no idea how I'm trading. None of you do. Okay. I'm teaching you, obviously for those individuals that are outside my paid mentorship, which is not open. So please stop emailing and asking. People are still sending me emails. Can I join? No, you can't join. Be content with this. I'm teaching you gold, and it's costing you nothing but the time to sit down here. And if it doesn't work, you're going to know right away. Okay. I'm not wasting your time. I'm going right into the brass tacks. That way, the people that are weak-minded will know right away this is it or it's not. That way, you'll know this is too much work for you. And that's fine. Go and do whatever you got to do, and I wish you good luck. But the individuals that really put the time in and test what I'm challenging you to look for, you're going to see it's there. And it repeats like clockwork. Okay? It's real important you have that mindset. So the buy stops above here that was taken, this swing low forms once this candle closes. So this candle we're watching, does it go below that short-term low? It does. So now we have a shift in market structure that is now bearish, only because we've taken buy stops. Okay. Fair value gap forms, market rallies up into that, you go short there. What are you looking for? Below here, sell stops. Below here, sell stops. Below here, sell stops, and in this fair value gap here. So if you are in a position that has multiple contracts, or say you have a forex trade, because this works in forex too. It's not just limited to futures. Again, I'm just using this asset class because I cut my teeth on these markets. When everybody else was still in elementary school that's trying to teach today, I was trading the S&P. Okay, I probably sound like a young guy, but I'm actually getting ready to turn 50. So I've been around for a long time, 30 years, this November 5th, 30 years, that's 3 decades. And the things I'm teaching you, I'm not teaching you one trick pony insight. These things work on all asset classes. Now, I'm not going to co-sign the crypto markets because that only my students are reporting that this stuff works there. I don't even mess around with it that much to know, okay? But you can take partials below here. I really wouldn't do it there, but below here, here, and then somebody saying, well, why wouldn't you take them below their ICT? Well, if you're trying to get short here, that's not really that much movement. So if you're going to take something off your trade below that low, why not just try to reach for that one? And you could get it there, here, okay? And then below that low is nice as well. Below this low, and this is what I mentioned on the first lesson, okay? Elements to a trade setup. This is below the 50 level of this high and that low, okay? So 50% level, that's what we're targeting. Now, this candle's low was the high end or first objective inside this gap. So that's your target. You're going to look for that. So
Okay, so That's all you need to know, right? And if you think about what he's telling you here, we broke a high. The market's pulling back for a retracement. Is basically what he's saying. As soon as you break the swing low, you look for the imbalance. Price trades into the imbalance. That's where you take your short. You target the lows at the 50%, right? At the discounted rate of this up move. And that's where your trade is from here to here, right? So now you would look for your trade to go and break these highs to show you that it's pushing back bullish, or it won't, or to keep going down. But if we go back to our chart, the same stuff happened. Here are your highs. We took the highs right here. If you draw a line out, these highs were ran. The market immediately turns around and breaks this low. All we're waiting for is the price to trade back up into the imbalance, right? And we target the lows at the 50%. Here's your 50%. This is where your target should be. Bruh, I didn't just create that. That's I mean, I can't get any more clear than that. It's not just me talking. Y'all heard it from the source. I'm just highlighting the trade opportunity. This right here will pay you thousands and thousands of dollars, guys. Thousands of dollars, right?
A week.
Yes. Listen, here's the thing, man. Like, if you just line this up for the 50, that's 343. Look, I just showed you last week was a 300 pip trade. I'm showing you a 343. Guys, this right here, man, in my opinion, it doesn't get much better than this.
When you can hear what 100 different people that know this, right? And when you hear them explain it, they know. Like, it doesn't matter who says it. Everyone is saying the same thing. Whatever can make you understand it, then that's what it's going to have to take. When you have that aha moment, it's like a umbrella worth of aha moments. It just happens over and over and over again, but everything still leads back to the same thing. And it's crazy. And then you look back on your time doing all this and you just see where you're just making it way too difficult. It's not even that difficult.
Bruh,
And now you're in it, right? You're in it, you're comfortable, you're seeing it, you're accomplishing your goals. And to other people who haven't got to that position yet, you want them to get there, right? You want everyone to get it because it's not as difficult as people think. It's just not.
and we just, just the caveat of that, we got to stay out of our own head. Like, I mean, we're our worst critics and we're our worst enemy when it comes to these markets. I mean, we see it. We see it. You see it right here. You see where the price needs to go. I got in this trade and I was like, oh man, it's stalling out, right? I could have panicked and pulled the plug, but I didn't. Like, I really wanted this to happen. And here's the truth. I wanted this to happen Friday. I thought there's no way it couldn't happen on Friday. You know what I'm saying? Like, this was like 5 a.m, dude. So I'm like, man, it's gonna go up there by lunch. And it didn't even get close. But it doesn't mean the trade isn't gonna happen. It might pool diddle and mess around, but this is exactly where it's going. So a lot of times we have a false sense of control of the time that it takes. Hey, I'll be in and out of this trade. You may or you may not.
Right.
I mean, that
and
thing.
we'll box ourselves in with that idea.
Exactly.
Right.
Exactly. So if we can find a way to put the parameters on the trade and walk the hell away. Allow the trade to allow the cake to bake. It'll get there eventually. And the difference is it'll get there and pay you instead of it getting there without you. You know, instead of you saying, hey man, I'm gonna cheap out on this stop loss. I'm gonna use a 3-pip stop loss. Man, use the real stop loss. Cover this.
Use the real stop loss. Yeah.
Yeah. Because you know, bruh, 300 pips, man. You gave up 50 pips and turned down 300 pips. You paid 50 when you could have had 300. And here's another scenario where you're going to have an opportunity once price pushes up here. I mean, who cares what your stop loss is if I showed you it's 300 pips for you to gain? So if you're sitting here and you got to risk 61 pips, right, to cover this high, you risk the 61 pips because you're getting 343, bruh. If you're that cheap and you want to skate out, you watch it on the 4 hour. When you get that 4 hour order block, if you drop down to the 15-minute, you're gonna see the same structure where the 4 hour push down on the 15-minute chart is gonna have an imbalance. Wait for price to pull back up into that imbalance on that 15-minute. It'll be somewhere within this move, and you can take that trade on the 15-minute. You might get a 10 pip stop loss, and you can get all 300, whatever's left of this 343 down here. And your percentage on this trade inside the bigger trade will be something dumb like 12 or 13%. So you have one trade at 6%, the first entry, and then you can drop down and get another trade at like 13%. That's 18% with 2 different positions, same trade idea. Do you guys have a clear understanding?
I sometimes get lost in the second position, entry where the stop loss go.
Well, I have a problem with that because this, if you understand structure, it's the exact same. I want you to pay attention.
I get structure, but I do also know that the smaller time frame structure can easily be broken. The 15-minute.
Hold on. I don't agree. This is a fifth. You know, he trades on a lower time frame chart, right? Y'all know that?
Mm-hmm.
Like ICT's charts are generally going to be 15-minute and below. But the structure on these charts is the same thing. This structure needs to hold up. So where I go with that is if you know how to read structure on the 4 hour, right?
Yeah.
This is a 4 hour structure. This high shouldn't be broken. Doesn't matter how far we drop down. This high right here, if this is broken, then this idea is bad.
Why isn't it not the wick?
This one right here? Or this up here?
Yeah.
Because this push down is what broke these lows, not this, right? This move right here is just part of the up move. Then it pulls down. Then it pulls up. This push down right here is the one that sponsors the break of all these lows. It starts right here. So I want price to pull back up into this imbalance. If you notice, whenever your boy is teaching on his chart, this swing low was broke by this move. It wasn't broke by this move, right? This move didn't break this low, but this move broke this low, and we still traded back up into that leg. Right now, this move breaks this low. Now we're waiting for the trade to come back up into this imbalance. So look at our chart. You got a low right here. This move breaks that low. The trade trades right back up into that, even though there's no imbalance. So you missed this move. Now you have a move with a huge imbalance, right? Nothing has traded back to this imbalance. We broke this low, all these swing lows were broken. Right? You tapped into this zone if you're a zone trader. If you're not, you can ignore that zone. But all this stuff is confluence. Now your trade is pushing back up. When you push up, you break this high, which is what? Chalk, right? You got chalk. You pull
Yeah.
after the chalk. Now you're trading back up. Where is price going? Price is going to the zone. You don't have to worry about getting this buy. If you didn't see the buy, you didn't see it. Right? It's an inverted head and shoulders, it's a little sloppy, but it's still inverted head and shoulders. We expect price to trade into this zone, right? It could trade into the imbalance way down here and push away. It could close it totally and push away. When ICT teaches about the imbalance, he always says get in at the beginning, right? I'm not going to get in at the beginning, but you can. You can get in at the beginning if you want it. You can get in way down here and have a 94 pip stop loss. Is still over 3%, still over 1 to 3, and you can get your second entry. But I'm in the buy, so I'm not worried about getting in at the beginning. I'm going to wait, right? Because I believe it might close it the 4-hour imbalance, which would be this point. Maybe it goes a little bit higher, closer to the 78, which is his own optimal trade entry. So why wouldn't I wait? But the point is, wherever you decide to enter this trade for the sell, we have to cover the swing high. Everybody understand that?
Yeah.
You can't get in this trade and cheap out on this stop loss because you enter way down here. You still have to cover the swing high.
Mm-hmm.
Once price turns around, right, it's going to break some level of structure. The same way this price came up here, as soon as it turned around, it started breaking structure, retracing into after it breaks the structure, retrace. Now it broke this structure. Now it's pushing back up. So at some point, this is going to turn around and start breaking structure. And depending on what level you get in on, the 5 to 15 minute, like if you want to drop down to the 15-minute chart, it's going to be the same scenario, right? So if you look down here where we broke this high, it broke that high. Price push up, we break another high. It pulled right back, pull right back to let you in the trade.
Yeah. That was a nice pullback.
You broke this high, it pulled right back. So what? It was 15 candles later. You got the post move, the pullback. Some of you would have jumped in up here, then got the pullback and got scared, got out the trade, then it takes off. We broke these highs, it pulls back. So it'll be the same thing. We know where it's going. Everybody knows that this is your imbalance, right? This is the imbalance. This is where the trade is going before it sells down. We already talked about where it's going when it sells down to the golden zone. So however you decide to pull this trigger, whether you pull it right here at this level, or you want to wait for it to come up here and close the lower level imbalances. What I will tell you is sometimes it's not going to close to the nth degree, right? So if you're waiting for that to happen, you might get stopped out, right?
Go to the 50%, the GAN box.
Yeah, you can do the GAN box, but also it might wick these highs, right? As a liquidity run, a stop run or whatever. So you have to prepare for that. That's why I would never have a stop loss right here. I would always do a few pips above. That's the same thing he was saying when he uses his three pip thing, or his three ticks for his futures. We all see it. We all have an understanding of what's going to happen, right? If you had saw this move that broke this low, you would have expected price to trade back up into the imbalance. And you see the imbalance. Now, if you had tried to get 50% of this imbalance, it'll never hit it. That's why he tells you this is where the imbalance started. That wick right into that imbalance. You see that?
Mm-hmm.
So if you did it like he said, if you set your limit order right here, this would have wicked you in the trade. Your stop loss would have been above this high, and you could have taken that trade.
That's going to change your life. Once you understand that little aspect, there's so many different things we need to understand, but when you put it all together, man, this is like, you have to know this.
Exactly. It's crazy. And you could have targeted this low right here. Look at this. Look at the risk reward on this trade right here.
Automatic.
106 pips, 5.5%. And this is a lower time frame trade idea. It's the same exact thing, man. It's based on this push down breaking the structure. Trade back up into the imbalance. Drops. Target the next low. You can't make it up. You can't. Push down.
The
Breaks
amount of time
straight back
that
up.
the amount of time that a lot of people actually spend on the chart, and they don't do none of this. This is the money that they want. You got to know how to read that.
So you can't get lost if you understand the structure, is what I'm saying to you. If you understand what you're looking for, I'm looking for the impulse move that broke the structure. Let me find the imbalance in that impulse move, and that's where I'm going to set my trade up, right? I'm going to set it up right here. I'm not doing it right here. I explained to you why I'm not doing it right here. But this is where you're supposed to do it. I'm in the buy right now, so I don't need to do it like this. And you don't have to do it. Maybe you're going to see it reject. When it rejects, it's going to come down and it's going to break structure to the bottom side and it's going to pull back. So y'all don't ever have to have FOMO. Like, this is a 4-hour chart. There's at least 5 other time frames lower than the 4-hour that y'all have access to. 3, 2, 1, 30-minute, 45, 15-minute, 5-minute. Like, all these time frames are lower than the 4-hour. So if you miss the move on the 4-hour, you can always drop down to the lower time frame, and you're looking for the same exact signal.
Todd, I have a question.
Yes, ma'am.
So, I came in a little bit late, so I'm not sure if you already covered this, but did you catch that first sell down or no?
This sell down?
Yeah.
No, I traded EA down.
Okay, and it was like similar setup?
I think let me see on the weekly chart. Yeah, it was the exact same setup pretty much. This one went a lot higher than EA. Were you on the meeting last week?
Mm-hmm.
So if you remember the meeting last week, we talked about EA and we talked about this push down. It was a God's plan trade because the candle had traveled almost 500 pips. We expected this to sell down, right? Which it eventually did. If you had used the 100 pip stop loss, there's no way you would have missed that trade. It went 300 pips, right? So it would have been a 3-to-1 just on the 100 pip stop loss without you looking. You caught a 3-to-1 move, but it's the same situation has materialized in that trade. The same way this trade is. So you trade this back up. Here's an imbalance. You're looking for maybe a sell. The only difference in this trade and that other trade is this low didn't break this low. We broke these lows. So even if it's not going to go all the way down, you're going to get a rejection at this imbalance where you can trade down, right? And you'll have to make sure that you're trading it to that first low. So if all things stay the same, then this might be the level that you're looking to sell it back down to. On the EN trade, the difference is you broke all these lows.
Right. Okay. Okay, so my question for you is, so basically when I trade this setup, I can't really get in on a move until I see like it take either a swing high, then a swing low, or a swing low, then a swing high. So my question to you was, how did you identify that it was creating that setup at the very top, like at the beginning of that first sell, because to me, it doesn't look like I would need it to swing down and break those lows before I could identify that as an ICT. What I call it a stop run. You know,
Okay.
where it goes up and then it goes
Yeah.
down.
So you can
So
see
before it
that,
swings down, how did you recognize that?
you mean right here.
Yeah.
Okay. So you saw it, we saw it take the swing high. It broke the swing high. So you know that's done.
Mm-hmm.
The change of
Right.
character doesn't happen until this candle breaks this low.
Mm-hmm.
You see that? Let me move this fib so everybody can see. There's a low right here. In fact, there's relative equal lows right there. You see them?
Mm-hmm.
So you have relative equal lows right here. This is where your change of character is. Right? So here it's the same thing. When we take out this high right here, you see this high? We took out the high. You got a low right here. So your change of character is when price comes down and takes out this low, it takes out this low. It trades right back up into that and goes lower, taking out this low and eventually this low, eventually this low and this low. So maybe you wouldn't have saw this on the 4 hour, but I guarantee you see this bad boy on the 15-minute. Depends on what time frame we're trading. This is what it looks like on a 15-minute. You see where you broke this low. You see that. You see the imbalance in these candles that broke this low. Now you're just waiting for price to trade back up into the imbalance. Boom, it trades right back up into your imbalance, drops lower.
Mm-hmm.
I don't trade.
So I guess.
Go ahead.
Sorry, go ahead.
I don't trade on the 15-minute. I don't trade these lower time frames, but the setup is the exact same setup. There's your high that got ran. You said you don't trade until it breaks a high, a swing high.
Mm-hmm.
You don't trade until it breaks the swing high, then breaks the swing low. So every one of your conditions are met. It breaks the swing high, comes right back, breaks the swing low, trades right back up into your imbalance. This is the move that broke the swing low. Trades right back up into your imbalance, gives you an entry. ICT would have said your entry should be right here, and you should cover this high and your stop loss. It puts you in the trade, like triggers you right in, drop right off, pull back again, give you a second entry, or put some more on as ITC say, and then the bottom falls out your trade. You could have targeted this low.
So where would the stop loss go for this trade at the top?
Sweet baby Jesus. Okay. If we look at this chart as a 15-minute chart, and you look and you see where your equilibrium is, right? You break this high, you come back and break this low. This move is the one that broke the low.
So it would be right above that.
So your
Order block
entry is here. The stop loss is above this.
right there.
This high,
Okay.
right? So
that's why I was trying to make sure, like, that the stop loss would be there as opposed to the top.
Yeah, but
you give it a little breathing.
Why is it there? Why is it there?
That's the one that broke the swing low. That's the move that broke the swing low, right?
Do you trust it?
Do I trust? I don't trust a lot of things, but
I mean,
Right, that's what I'm saying. You wanna be able to trust that as to why. Why? Because the structure is healthy. Every aspect, this is a grade A setup. And if you don't have a personal grade A setup, it's great to be in on this conversation, because that's exactly what this is, right? You use this, you could use 1,000 pip stop loss. It don't matter what, we're just making sure that there's a stop loss in place. You really don't need one because it's a grade A setup. Doesn't mean it's going to win every single time, but most of the time this wins, right? You have to have a grade A setup and it incorporates a perfect stop loss.
So the fib would go from the 100 at the top of that wick and to the bottom of that wick, and then that looked like it's like a 51. I mean a 50%, like a
Listen,
51 or 61.
if we're fibbing this move right
Not
here,
that one.
so what are you talking?
The one that where the stop loss goes, like where the stop loss goes at the top.
Right here?
Yeah. And then fibbing that to the bottom
Okay, let me see.
of that miniature, that mini drop.
What I want to ask you after
Yeah.
we talk about this is
Mm-hmm.
what do we have the fib out for?
Because that helps me. That
Well,
helps me.
but why? Why? Let's talk about it. Why?
It's confluence for me to see where price likes to pull back into, and so that I can look to the left and see what's going on.
Okay, so
But I see the imbalance.
okay, so
And
let's talk
I see
as a
the
group.
resistance to the left,
Okay,
or the support to the left.
but let's talk about this as a group because I didn't make this up. The source, this is the source, made it up. Notice he doesn't have a fib out. He's talking to you about what you see on the chart as far as price action, right? He's giving you conditions that need to be satisfied. We took out the liquidity. We ran these highs. The market is reversing, right?
Yeah, I'm just saying those are my wheels.
But this is where we get in trouble as traders. We make shit up. And what I'm trying to get everybody to understand is let's not add to what the source is telling us, right? The source is saying when you run these highs, we ran the highs and the market reverses. The first clue that you have that this market is reversing, he just said about all the stuff on the chart because it confuses people. If you look at the swing high and the swing low, the first clue we have after we run this high is if we run the swing low. The market comes right down, runs the swing low. Those are the task conditions and standards, right? This is the condition of your trade. You run the highs, and then you come back and break the swing low. Those are the conditions of your trade. If those two conditions are met, you might possibly have a trade set up. Once those two conditions are met, you look, hey, when we broke the low, was there imbalance created? Either yay or nay. If it was, then that's when your light bulb goes off.
Mm-hmm.
So that's when you look at the imbalance. So if you're telling me that, hey, man, after that tide, I'm going to throw my fib on. Okay, do what you got to do, right? But if you don't understand the first two things that are setting your trade up, we're going to get in trouble just by throwing fibs around arbitrarily.
Mm-hmm.
The conditions of us having this trade is we broke the high and we turn around and broke the low. We call that chalk, change of character, whatever you want to call it. I mean, that's why we have the trade set up. Once we have those two conditions, we look for the impulse move and see if there's an imbalance. If we have those two things, now we have an area that we're interested in for the trade to pull back into before it cooks.
Mm-hmm.
So if you're telling me that you would throw a fib from here to here, I'm not going to argue with you and say you shouldn't do it. But what I'm telling you is you don't
understand why I'm doing what I'm doing. Like understand the first two steps.
Yes.
Swing high, swing low. Yeah. Mm-hmm. Got it.
We can flip this upside down and say the same thing if we ran the lows and then turn around and broke the highs, right? Which is the exact thing that I was looking at over here. It's the exact thing that happened. You run the low, you come around and you break the high. We broke both of these highs. It pulled right back. I didn't catch this first pullback, but when it came back and wicked this high, I saw it and it pulled back and I got in the trade. It's the same thing. I understood where the trade was going or where I wanted the trade to go to, but I didn't catch the first move. I didn't catch the initial move because I was trading EA. But I just want everybody on the call to understand what we're looking at.
That makes a lot of sense. That just now, that's the first two steps that we're looking for, because that was the disconnect for me.
Right. So y'all always hear us joking.
Particular.
I'm sorry. Y'all always hear us joking when we say, when are you getting the trade? Once we see your stops get ran. Once we see the liquidity get taken out, right? That's what they're talking about. You run the highs, right? It's people that went long, and then whoosh, the carpet gets pulled out. Once you see that, here's your cue. Now we're looking to get in the trade. The liquidity got ran. Everybody got flushed out. The highs and the low got flushed out. Now you're looking. Now it's time. Now it's action.
This is epic. This explanation is epic. Real time.
Yeah, I like that. You explained this really, really well right now. I mean, you always do. Not that you don't before, but this particular way of the entry and what you're looking for, particularly, I don't know. I like it. Thank you.
You're having an aha moment.
But
I see it differently, but we see it differently, but it's sometimes when we're saying it differently and we come back and we learn more information, and then it starts to click more.
Yeah, hopefully everybody has the same click. And the same thing he was saying on the video, this right here, this start of these green candles, this is your order block. And obviously it's your order block. On a higher time frame, this is an order block. This and then the red candles. We know that's an order block. This green candle is one up closed candle, and this red candle here is one down closed candle, probably on your 4 hour. And oh, look, it's the order block on your 4 hour. The same S that he said. The trade goes right here to your order block and it sells. Jeez, man. But damn, ICT, that's all you had to say is at the order block. I mean, that's, all of this is the same stuff that we're repeating and regurgitating over and over. It's the same. It's the same. But maybe you understand it, when we say it a little bit differently. But at the end of the day, we've all been doing the exact same thing, and we just haven't looked at it like this, like saying, hey man, I don't see liquidity, just like Rose was telling me, that doesn't meet my criteria. Well, yeah, it doesn't meet your criteria on that high time frame, but if you're looking at it on the lower time frame, it does. It's the same.
And so on the 4 hour, when we're looking at the same thing, like the imbalance area, and then we're dropping down. Is that right? Well,
yeah, but see, here's the problem. The problem is none of us has a rewind button, right? If you notice, this is the high, and we ran that liquidity, right? Well, once this happens, we can't rewind and unsee it. You know what I'm saying? Like, I mean, if you're a smart or a savvy trader and you see this one candle, now you can drop down to the 15-minute and mark your lows, right? On the 4 hour, I got this candle. So maybe on the 15-minute, I need to drop down and mark my low, because if we break that low, right?
Yeah.
If we come down and break this low, now I know I got a trade set on. But I don't want to fool you into thinking this is going to be something that's quick and sweet, right? Because this was the up move and then this was a down move. So maybe you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 10, 15-minute candles, right? And then a crap ton more before your trade actually comes on. So,
That ain't nothing but a few hours.
well, maybe a few hours, maybe it's in the middle of the night while you sleep. But if you mark this low and set you an alarm,
Mm-hmm.
your phone will let you know when okay, we broke the low. Now I need to go look for my entry. And you can set this trade up and you don't have to be there when it happens. Because you understand your parameters. You got your 20 pip stop. Hey man, I'll be in this trade,
Yeah.
it'll give me 5% if it goes down to this low. You're not targeting anything below this low, right? You're gonna take your 5.5%. You're gonna have you a merry day.
And Merry Christmas. Happy birthday.
There you go. But if we all can see this, right? If we all understand the requirements of the trade, anybody can see a trade setup. Now the only thing you have to worry about is what time is this, right? What time does this happen? This entry actually happens on a late Asian session. Most of us ain't looking for trades at this time.
I like that session because that's when I'm home and free.
Well, that's cool, but it's not going to happen like that all the time.
Yeah.
But if you notice, let's just say you miss this Asian session, it pushes down, breaks a low, comes right back up for your London session entry too. Bing, 1:15 in the morning. You see that?
Mm-hmm.
Pushes down, breaks these lows, pulls right back up at London, gives you a second entry, and I guarantee that's a 78% pullback. So it's the trade setups are on point. Understand what you're looking for. You have all the ability. And once you see this, if you're looking at this on a 15-minute, you got to drop down to the lower time frames, lower than this. And you're going to see the same thing on that second entry.
Fire.
Huge imbalance. We broke this low. Trade comes right back up there into that imbalance. Bing! Bottom falls out. Huge imbalance. We broke this low. Trade comes right back up. Bing! Bruh, like 1 entry, 2 entries. And it falls to your sideline. If you want to target these imbalances, it's a 1,000 different ways that anybody could have gotten play or action on this trade because you know what you're looking for.
I think there's a lot of aha moments happening right now. I think it's going to be an awesome week. By this time next year, like I said, man, the sky is not even the limit. It's not. You're just going to be adding zeros. That's it. I'm telling you.
Well, and here's the thing too, guys. It's one thing to see it. You're even though you see it, for whatever your psychology is all jacked up, you're not going to be able to execute this perfectly, right? The thing that helps your execution is to set your limits. Don't watch the candles. The program is designed to scare you. It's like going to a haunted house. These candles aren't going straight to where they're supposed to go. Who was in this EN trade with me? Who was that? Was it Pippin? Who? Somebody was in this trade that morning.
I marked it up, and I marked it up too early, but I didn't get in on it because I was already in another trade.
Did you watch those candles though? Did whoever was in that trade? I mean, bro, it was like a horror flick. The trade goes up, it comes down. It goes up, it comes down. It's way down here. It comes way back down here. It's designed to scare the hell out of you. It's designed to get you out, man. I'm pulling the plug.
Yeah.
So
You
is
know?
that how you control your psychology, by just setting limits and getting in the trade that way?
Yeah.
Well, you're doing it
Or you set
properly.
your parameters. You have parameters. If you know
Yeah.
that this is your swing low, for one, don't watch the horror show. For two, allow your trade to either hit your stop loss or your take profit. This is just a horror movie in between here. Or this is a setup for somebody who has a heavy hand. If you know
Yeah.
you like to put 6 lots on a trade, it shoots up. You might have got in with 6 lots right here. It pulls back just to blow your account. And then it goes up here. So if you're an over leverage type person, you can't be over leveraging because you might get this type of scary action.
What's that? The 96% of traders?
Or over leveragers.
Yeah.
Yeah, I mean, you get heavy, man. You get heavy handed. I'm with you. Some trades are beautiful. You can over leverage the hell out of them, but you got to make sure the market is cash. Right? But this is a perfect example of you can be exactly 100% right on your trade idea and over leverage, and this thing can go south on you real quick because they taking the trade where it's supposed to go. They just taking it up and back, up and back, up and back, up and back. It's like a horror flick. That's what I'm saying. Like, God, dog. It was at one point I said, man, this thing gonna fizzle out. I think I might even put that in the chat. Like, man, this is not gonna go. So look, man, like it happens to everybody. This is why I don't want to watch any trades. I'd rather go work.
Right. And people are like, oh, what's the signal? Like, we can't give you a signal on that. It's a navigation. It's not concrete. It's moving. So you have to be able to maneuver, right? So I might get in at a certain point, but if I feel like it's breaking down, I might get out and then get back in when it shows me again. But really, we shouldn't be doing that. We should take the trade and trust the trade. Put the stop loss where it goes, and if it loses, it loses. That's one trade, not 10.
And look, this is the kicker, y'all. At the end of the day, this is a 15 pip stop loss. And I promise you that and more than once, I like, man, this thing gonna hit my stop. I didn't have a hedge on this particular trade because it was an intraday trade. It was just a trade I went to take on Friday. I really thought this trade was going to be fast. I really did. And I mean, it went up, back, and eventually, I just went and worked out. And when I came back, it was somewhere over here. And I was like, well, man, the market was so unpredictable last week. Even the dollar had me fooled, man.
It didn't have me fooled.
The dollar it hooked and laddered. The dollar hooked and laddered. Remember that day? What day was that?
What, Wednesday?
When it wicked
Thursday?
It wicked the high. What day? This day right here. Wednesday. I'm like, oh man, it wicked the highs, right? It wicked the highs, it tapped that zone. I'm like, man, this thing gonna sell. Sheesh. Man, this the dollar kept going up.
It's demand. It's demand.
Yeah, it's one of those things to where if I had taken a short on the dollar, I would have had to set my stop above these highs, and I probably would have got wicked out or close to getting wicked out. But you're gonna win some. Well, you won't lose if you put your dollar. I mean, you put a position above the swing high, and your swing high is based. This move is based on it taking these lows out. It should trade back up in here. It really should have traded to this area and sold off, but it didn't. See how price traded to this area, rejected, and then said, "No, hell with that. I'm going up."
Yeah.
So if I had taken this trade, I would have lost this trade because this is the area I would have protected based on this imbalance and the push down.
Right.
I mean, the setup is perfect. it respected it first and then it ran it. This is a loss. You take that loss, but you followed the rules. Sometimes you're gonna lose. But the idea was respected. And if you had taken the idea here, you know, pushed down, broke this low, traded right back up into that imbalance, boom, you got paid.
And it's still a forward test because you want to see what's probable. Okay, I've never seen it do this before. Okay, well, now it's a feather in my cap. I'm using it moving forward. I know what the probabilities are.
Well, I think
I love
this is
doing
what
that.
I think they're going to do right here. This is what I think the dollar is going after.
Yeah, I mean, it's clear as day.
That gap.
It's clear as day.
So, you know, don't be afraid to lose your trade, but don't self-sabotage, man. Like,
Yeah.
take your trade based off of a solid trade idea. And then don't pull the plug on your idea. Don't cheap out on your stop loss. If your stop loss is too big, oh man, I don't want to use a 100 pip stop loss, Todd. Well, drop down to a lower time frame and take it from the lower time frame based off the same criteria.
And you got to be accountable. See, that's the thing. People don't want to be accountable. Accountable to who? Like, do we know what we're doing? Because I trust me. I know how to trade. So now I have to stand on what my rules are, or I'm not profitable. So am I profitable? Yes. So how do I stay profitable? These are the things you have to, it's like self-talk. I always go back to that because you have to, not only am I accountable to me, I'm actually posting analysis. My analysis is fire. I know it is, right? Because I have to follow it. I have to keep my finger on it, and I have to be accountable for what I'm saying. I'm really just reading what it's doing, and I'm playing it as I'm talking about it, right? I'm talking about healthy price action. If the price action is healthy, you're gonna catch the 78. We proved it all week. The analysis other people are starting to post, they're spot on. It's only going to get better and better. People are waking up, I would have to say.
Hey Todd, can you pull up UJ real quick? Okay, so remember how we were saying that it's going to hit the 0.78 fib on the lower time frames because we're getting ready for it to sell off. So if you like zoom in on the Thursday call, we talked about this. So the impulse move that like gave that second low, if you zoom in. Yes. So when you fib that, remember how we were talking about in the chats that that was almost at the 78 fib before Friday news came out? Okay, so if you zoom into the 15-minute time frame, so on the Thursday call, when we were looking at this, it was sitting at like the 0.7 fib line, right? And then it took out that swing, it took out the low. And then
You mean down here?
Yes. So on the call, it hadn't gone up yet. And so what I was talking about was telling everybody to anticipate that it would take out the swing high and hit the 0.78 fib and then sell off. But then everything started, and then everything didn't. I mean, like, I don't know, maybe it hasn't played out yet, but what are your thoughts on that? You think it could still sell?
Listen, man. You can't know. Like, I would be lying if I told you I thought UJ would be this high. Because I didn't. Now I did this line mark after after it kept pushing up, but I didn't know. What I did figure was that Powell is always going to pump up the dollar. You know, I knew that Powell on his speech was going to be bullish on the dollar, but I traded gold that day because I figured gold was going to plunge based off of Powell yapping this yap. So what I do think is that if we zoom out on the maybe it's the monthly. If we zoom out on this monthly, then we're tapping higher into this order block, but we're at the 78, right? Like if we fib from here down to the swing low, this is the 78 that price has tapped into that line, right?
Mm-hmm.
So we're all over the 78, and I do think that it's going to sell off eventually, but maybe it goes sideways first. I mean, this is a whole bullish order block. We got 5 days left. So,
Yeah.
you know, maybe we'll sell a little bit. I don't have all the answers. I don't know.
Now let me ask, because we always say that this follows the dollar. So is it in for those who follow it in that sense, would you say that it's a direct,
What, to follow the dollar?
is it a direct correlation with the dollar?
So yes and no. So here's the deal. It does follow the dollar, but in the situation that something happens, you know, with the world economy, like China, or like we get bad employment numbers. It shows that the U.S. economy is in trouble. This is going to fall. Like the yen is going to get stronger. So to me, there are conditions out there that would support the JPYs getting stronger. You had evergreens, crashing or whatever. If the U.S. employment numbers don't come in good, then maybe that's the catalyst to make this start pushing down. But this is just the 78. We all have seen price hit the 88 before.
So that high right there is last year. The dollar was at its highest point. That's September, October.
October, yeah.
Was right. So that could be a double top this year. It could be September, October again.
Very well could be. Very well could be. Now, if y'all think back to Pip's Persian, how he explains market structure, why would there be a bullish order block created right here below this bearish order block, so price can push through it? That's how he looks at it.
Right.
He said, anytime you see a order block created right before price gets to another order block, it's a pretty good sign that price could push through it. So, man, who knows, man? Maybe this thing runs up higher.
Right. And the dollar would be back at resistance.
Exactly. So if you think about it, we're still riding the moving averages. It's the same on this time frame as it would be on your 4 hour. We always say, hey, man, you can't take a sell until price breaks the moving average.
Right.
Man, price ain't even sitting on the moving average. Price is way above the moving average. So even if you get a great sell for UJ, it's still bullish.
Yeah.
You could get a 800 point sale, 800 pip sale, and we still bullish.
Yeah.
So
that's fire.
Yeah, it's listen, I would be lying if I told you I thought that we would be here. I really thought this candle was going to sell and we get another candle this, I thought we were going to sell off all the way back to these lows. And eventually we will sell off back to these lows, but it just might not be, maybe it'll be in October. Maybe, I don't know. I don't have all the answers. So if I'm y'all, I'm trading based off these 2-week charts, these 2-week candles. If we're bullish, then we're bullish. That's all I got to go by,
Hey.
We're bullish. Maybe I'm trading a pullback, but look at that huge imbalance. After we broke this high already, we broke a high Here's an imbalance. Eventually, that's going to come into play. Maybe we'll break these other highs, but then price it pull back, fill this imbalance, and take off. It's all the same stuff. So I think that we might see or hear the news events that cause the price to actually reverse. But it, in my opinion, I can't tell you this is going to reverse. If we look at this 6-month chart, we got everything that we wanted to get out of this pullback, right? If we fib this candle right here, we fib this 6-month candle. Let me delete this one. If I fib this 6-month candle, this pullback was pretty much to the zone, right? Now, price action is healthy because there's a wick right here. If you look at this wick, it teams up with this third wick over here. So, I mean, it's really nothing lacking on this higher time frame chart. So we got 700 pips. We got a 700 pip sale, when this 6-month candle opened up. So basically from July, this thing cooked off mm, 700 pips, roughly 700 pips. Y'all remember it selling 700 pips? Or did y'all even know?
I wasn't tracking it at that point.
A lot of us were, because a lot of us took part in the sale and we bought at least some of the way back up. But if you think about this, from July, this is just August 26th. So that means you got 700 going down and about 900 going up.
That's crazy.
So 1,600 pips in a month, in 26 days.
Wow.
That's
And
crazy.
they say it's quiet over the summertime. No, it ain't.
Boom. That's not even counting the double action.
That's healthy.
You got all that move down and all this move up. So, yeah. So if I'm y'all, I'm just bullish until it shows me different. All I see is this: we keep breaking highs. So if y'all see this, we just broke the high. We know the dollar is going to pull back, right? TT.
Oh, what happened?
So you see this run up. You see this push up. We broke highs. We broke this high and this high.
Mm-hmm.
So we can probably assume that we're going to get a pullback. Here's our zone that we're pulling back to, which happens to be the imbalance that broke these highs, right? Maybe we pull deep into the zone. Maybe we don't. Maybe we don't break this low right here. But that's still a decent, that would be a decent drop. 85 pips. 100 pips to the 61. 150 pips to the 78. But I would just target this 107 pips to this imbalance. If I'm trading UJ, if I'm selling UJ to buy it.
Mm-hmm.
And the beauty of it is that it's gonna tap you in.
Exactly.
All you need to do is see the turn.
See the internal breaks to the lower side.
Yeah. That's our job. We know this.
know this, man.
Hey,
All right, what y'all trading this week?
GA,
You buying it?
G.
You buying
buying.
it? Huh?
Yeah, buying.
I like GA for the buy too. But EN is my trade. Who has questions? Who's confused? Anyone? Anyone?
Mm-hmm. It's gotta back test it. Good, thank you.
make sure everyone gets in on the competition. And
Yeah, I forgot all about that competition. I mean, I'm registered, but they didn't let me change my name.
oh right, yeah, I can't change the name.